In this week's video, we'll review the hard evidence to explore the question, how much progress did stock bulls make this week? To view the video in full screen mode, use this icon in the lower right-hand corner of your video player. To improve the clarity of the charts, use this icon in the lower right-hand corner of your video player. This is the weekly chart of the S&P 500 that we covered last week as of August 15th. This is the same chart as of the close on Friday, August 22nd. You'll remember last week we said we would learn something once we moved out of this range here. Well, we did that this week. We cleared this downward sloping trend line. That's a bullish move right there. And we made a new weekly closing high. The previous high was 1985 and change. We closed this week at 1988 and change. We said last week that we wanted this look to morph into something more like this, which is our full bore bullish look, which is price above both moving averages, blue above red, and the slopes of both moving averages are up, telling us that the probability of good things happening has increased. We did move from a mixed look to a full bore bullish look. All of this tells us that the probability of good things happening has increased. We'll enter next week with a flexible, unbiased, and open mind. This is the daily chart of the S&P 500 that we reviewed in last week's video. It's as of the close on Friday, August 15th. We said we wanted to see this trend line broken, these levels broken, and a close above the 50-day before we considered redeploying any of our cash and adding to our stock positions. On Monday, we closed at 1971 here, and on Friday, we closed at 1988, meaning we cleared all of these guideposts and thresholds. If you're a client, you may be wondering, why did we add to our stock exposure several times in the last 5 trading sessions? The answer is the evidence of good things happening from a probability perspective has improved, and we have more of it than we had a week ago. NASDAQ weekly, this is as of the close on Friday, August 15th. You can see we did have the full bore bullish look and a breakout last week. It followed through with an additional gain this week of 1.65%. The other noteworthy item in this week's chart, as of the close on Friday, August 22nd, is it too made a new weekly closing high. We'll be using the same concepts throughout the video. This is last week's chart of the broader NYSE Composite Index. This is as of the close on August 15th. We said this chart had some work to do. It did improve a little bit the week of August 15th, but we still had this downward sloping trend line to contend with. Potential resistance acted as resistance. This is why we term things as possible resistance. If we call this resistance, it brings bias. Resistance implies that price will be rejected here. We don't know that, so we always refer to it as possible resistance or possible support. In this case, resistance did absolutely nothing. We blew right through it. This is the same chart as of the close on Friday, August 22nd. Our developments from a bullish perspective: we broke the downward sloping trend line on a closing basis, and we now have a full bore bullish look. Last week, no moving average crossover, price was below red, the slope of red was down. This week, all of those have improved, and this look here morphed into a full bore bullish look, telling us that the probability of good things happening in the coming weeks is greater today than it was as of the close on Friday, August 15th. Probabilities acknowledge that this chart could resolve itself in a bullish or bearish manner. And that's why we have to keep a flexible and open mind. If you're new to the fold here, it might be helpful to watch last week's video and then watch this week's video. This is the Dow as of the close on August 15th. We said the bad news was that we did not have a full-bore bullish look. In fact, this is still a full-bore bearish look for the most part. Slopes are down, blue is below red, and price is below both. This is as of the close on August 15th. A week later, all of that has morphed into a full-bore bullish look with blue just barely closing above red. So from a probability perspective, this chart here looks better than this chart here. This is the weekly chart of IWM, or small caps, that we reviewed last week as of the close on the 15th. This is an example of consolidation that can be frustrating. The consolidation and the frustration are the bad news. However, if we drew a box around the price of small caps, the longer it consolidates and goes sideways, the bigger the move that we can expect when it moves out of the box. The key is, during this frustrating and whipsaw-filled period, you have to stick to your discipline. If you don't stick to your discipline in here, when it breaks out, you'll miss it. This chart, this is the look 7 calendar days ago. It too improved, and we have a full-bore bullish look as of the close on Friday, August 22nd. The charts that we're using here are used in various ways in the CCM market model. They're just a small sample of the inputs that go into the model from the 5 sub-models. We're looking at small caps IWM relative to treasuries. This is the chart we examined last week, where this ratio made a new low and had a full-bore bearish look. It improved this week. The ratio gained 2.13%, telling us that small caps outperformed treasuries. This is an improving look, but it still has some work to do. It is checking additional bullish boxes. How can that be? One example is price above blue. Here the answer is no. Now the answer is yes. When we reviewed the chart of IWM a few moments ago, we talked about whipsaws, indecisiveness, and consolidation. We have something similar here on the S&P 500 risk on relative to the VIX fear index risk off. Why are we seeing this indecisive look? It's to be expected, really. We're at a point where the Fed is considering a policy shift from lowering rates or printing money to potentially gradually stepping up rates, and that's the confusion that we're seeing. Again, the key is stick to your discipline, and if you do, the charts, the observable evidence, the trends, the moving averages, and the numbers, in our case, the market model, will get us in the right place. But that will only happen if we execute flawlessly. Flawless execution does not mean making money every day and everything's happy and a barrel of laughs. Flawless execution means sticking to your discipline, and eventually good things will happen from a probabilistic perspective. S&P 500 relative to the VIX a week ago, somewhat of a mixed bag. You can see here this was resistance, and the S&P 500 dropped here in black. Resistance for the ratio, bad things happened in the stock market. Last week we were coming up and testing that potential resistance. This week we blew right through it and closed above it, and we have a better look here. So this chart too is telling us that the probability of good things happening in risk assets is better today than it was a week ago on August 15th. If you'd like to hear or see a description of these 3 charts, you can review last week's video. You can find it on the Shivako Capital channel on YouTube. It's dated August 15th. This is the chart this week. As of the close last week, risk on stocks relative to risk off treasuries weekly had a full bore bearish look in favor of treasuries. This week, like many of the other charts, it improved. In this case, you're getting all no's. Is price above blue? No. Is price above red? No. Is the slope of blue up? No. Is the slope of red up? No. Now we have several yeses here. Price is above blue. Price is above red. Slope up. Slope up. The last thing that we would need from a bullish perspective is our bullish moving average crossover. We'll head into next week with an open mind, knowing that the probabilities of good things happening have improved. That doesn't take the bearish or disappointing cases off the table. It just means they're lower probability outcomes than they were a week ago. If you follow the markets or trade your own account, you've probably heard by now the concerns or potential concerns related to the underperformance of small caps. We cover that in an article that was published late on Friday. If you Google this title here, you should be able to find it either on Seeking Alpha or our blog, Short Takes. How do we track all of this and convert it into a usable and actionable format in a reasonable amount of time? The submodels, we answer binary questions, some of them manually done, some of them programmed in Excel, and we also enter in unbiased and hard data. The submodels allow us to get a handle on the market's current profile, and the master CCM market model then looks at the current profile, compares it to past profiles, and recommends a prudent allocation between risk assets such as stocks and conservative assets such as bonds. Conservative assets can consist of cash, bonds, currency, or any number of investment options. If you'd like to learn more about the market model or our money management services, you can visit our website, follow along on Twitter, Facebook, read our blog, Short Takes, or watch past videos on the Shavaco Capital channel on YouTube. The material in this video has no regard to the specific investment objectives, financial situation, or particular needs of any viewer. This video is presented solely for informational purposes and is not to be construed as a solicitation or offer to buy or sell any security or any related financial instruments, nor should any of the content be taken as investment advice. Any opinions expressed in this video are subject to change without notice, and Shavaco Capital Management, LLC, or CCM, is not under any obligation to update or keep current the information contained herein. CCM and its respective officers and associates or clients may have an interest in the securities or derivatives of any entities referred to in this material. CCM accepts no liability whatsoever for any loss or damage of any kind arising out of the use of all or any part of this material. We recommend that you consult with a licensed and qualified professional before making any investment decision.